Now, while the Philippine economy grew at a slower pace than expected in the third quarter, the government still remains confident that they can still meet their 6 to 7% growth target for the full year. But how realistic is this goal given the continued external headwinds? I sat down with BPI's lead economist, Jun Neri, to discuss this outlook and more, and to see what a potential Trump 2.0 presidency in the United States could mean for the country's economic policies. Here is that interview. Q3 GDP was just released. It came in at 5.2%, slowed a little bit from the 6.4% growth in the second quarter and the 5.8% in the first quarter. Was this figure in line with your own expectations?
Yes, we submitted 5.3% to Bloomberg's poll. Yeah.
Okay, so GDP at 5.2% in the third quarter. What does this say?
Well, if you look at the components or the factors that led to the slowdown, Mikey, first on the supply side, it was agriculture. It continued to suffer from bad weather. It continued to suffer from the threat of cheaper rice imports. No? That's why total production in rice was actually down 12%. No? So hopefully with improving weather for the months of November and December, we'll be able to make up for some of those losses. No? So it's a weather phenomenon. It's something we couldn't really avoid. No? In the second quarter, we contracted in agriculture because of El Nino. In the third quarter, it's because of the floods and the typhoons. No? So hopefully the fourth quarter will not be as bad. The other source of slowdown is net exports, which if you try to look at the breakdown is largely a result of an improvement in imports, no? which is really a mixed message or a mixed indicator, because while imports are subtract from the GDP, it's actually a sign of demand picking up. That means that overall absorption of the economies is improving, and that's actually mirrored by improving consumption numbers. For the first time in 3 quarters, Mikey, we're seeing household final consumption grow above 5%. No? And that's even happening when BSP has only had one cut, no, in August. No? The latter part of the third quarter, we had a rate cut from the BSP, a small rate cut. You would not really imagine that being the cause of the strength in consumption. Because of cheaper rice prices, we saw an improvement in household spending in 3Q with a growth rate of more than 5%. So the import number is actually a mixed bag. It contributed negatively to the accounting, but it's actually a positive sign because it means overall demand continues to pick up. So on the whole, if it weren't for agriculture and the weather, the economy would have probably grown 6% as well in 3Q. No?
Yeah. Now we've got to hit 6.5% growth in the fourth quarter just to meet the lower end of the government's 6 to 7% target range. Do you think 6.5% growth is attainable for Q4, given the seasonality, given that the weather is better, given that it's the holiday season, and then the inclination is really to spend at this time of the year?
Yeah, we think it's possible, Mike. It's very feasible. Just a slowdown in imports and a big boost from exports of services, and the sustained increase in investments. Actually, the investment numbers for the third quarter are actually pretty strong. If we can just sustain that in the fourth quarter, combined with better weather and again some improving momentum in consumption, we can't really rule out a 6.5% outcome for the fourth quarter.
Do you think we can sustain that momentum, especially on the heels of a Trump victory in the United States?
We think it will be a little bit more complicated for the Bangko Sentral this time because it looks like while we can continue with the rate cuts this year, the prospects for aggressive rate cuts in 2025 are not as, the space is not as roomy as before.
Right.
Yes. So this means that we could see an end to the cuts sooner or less cuts than anticipated. But next year's an election year, so we're not too worried about overall spending. Our politicians
And we're
and
not too worried on the local front because our fundamentals are good and the trajectory is good. But the external headwinds are something to consider because Trump's policies are US centric. That's going to drive growth, but it's also going to lead to higher inflation and a bigger deficit.
Mhm.
How is that going to ricochet?
Yeah, that's really going to be a big challenge, Mikey. But there are solutions. There are ways to go around it. Like we are members of many trade agreements, no, including the RCEP, the ASEAN, name it, JPEPA. So many trade arrangements that we can tap as a way to make up for possible challenges arising from U.S. protectionism. No? So we're very strong in exports of services. In terms of migration, Filipinos are generally preferred because of their English and their skill set. So it may not necessarily translate to weaker performance for the Philippines next year if we consider these factors. No?
And new administration in the US, new economic policies, it's really a natural progression. It really happens that way. But in terms of monetary policy, we're not expecting any big swings, any big changes. The course will be as is. What are your thoughts on this?
Well, there is a risk that because of higher tariffs and possibly higher wages, Mikey, because of reverse immigration, um, this could cause inflationary pressures in the US to bounce back. No? So they've been able to tame inflation for about 9% in 2022. They've been able to bring it down below 3%, which allowed them to start cutting earlier this year. But if the higher tariffs and more expensive labor because you're not allowing as many people to come in, no, into your country causes inflation to rebound, then the Fed might have to stop cutting rates, maybe even at one point be forced to hike rates. No? So that kind of concern, which is actually supporting the dollar at the
Right.
moment, no, with with less cuts and possibly even rate hikes in
It's
2026,
going to be a
2025.
while for those policy changes to happen and to really take effect. In the meantime, the Bangko Sentral ng Pilipinas is going to be meeting in December to talk about interest rates. Expectations were for a small 25 basis point rate cut, which would bring the cumulative rate cuts for the year to 75 basis points. What do you think the BSP's monetary board is going to do when they meet on December 19th to talk about interest rates?
Yeah, well, if you look at domestic data, Mikey, you would think BSP will really continue with the rate cuts, no? Since inflation is still well below the 4% upper end of the target, GDP is slowing down, no? So most of these indicators point to the BSP resuming the rate cuts. They're still at 6% at this point, and inflation is only around 2.5. So quite a lot of room there as far as managing inflation is concerned. However, the peso has become a lot more volatile now, as you have seen from last night's and yesterday's price action. And if the Fed, by some chance, decides to pause in their December meeting, because it looks like it's a done deal for November, they do decide to pause in December. And if we do see things moving fast in the US for all of this legislation to increase tariffs happen very quickly, or anticipated to happen very quickly, because remember, it's a red sweep.
Yes,
It's
it's a
not
clean
just Mr.
sweep.
Mr. Trump who
Control
won.
everything. Yeah.
Yeah, so there's going to be very strong support on the part of U.S. Congress and Senate, no, on his initiatives, on his
Yeah, he'll
initiative.
have the latitude to do what he wants to do when he wants
Exactly.
to do
So
it. What does that mean for us? What
those
is
plans and promises can be implemented quite quickly, and that is what has put the market on edge on currencies and why the dollar has been strengthening. So while the BSP doesn't seem to be too worried about the peso's weakness, uh, very rapid strengthening of the US dollar could actually lead them to be a little bit more conservative on their stance, regardless of what the local numbers show us. No? So there might be some skips in the rate cuts, maybe even pauses at one point
As an economist,
because
Jun,
of these considerations. Yes.
those considerations, exactly. As an economist, do those considerations scare you? The fact that we're going to have Trump 2.0, the fact that he's going to have control of Congress and the Senate, is it too much power?
Well, the point is his plans, his campaign promises are probably going to be put in place a lot faster. No? It may not be as exactly as he had laid it out during the campaign. Of course, there's always a gap between campaign promises and no reality, no? Because he will have advisors who will probably keep him from being too aggressive with the tariff hikes. But the speed by which they can carry out all of these reforms is looking a lot faster than many people anticipated. I think very few analysts saw a Republican, a dominant Republican government coming in
Yeah,
by
you said it.
January.
A dominant Republican government via a clean sweep. That said, the biggest occurrence was really Trump's win. Does it change your projections for GDP and for the year-end target for the currency and for the PSC index?
Yeah, for inflation and policy rates, as well as the dollar peso, Mikey, there will need to be some revisions. I think that need be put in place for next year. For growth, we're not really all that worried, even if the BSP doesn't cut as aggressively as anticipated. We think again there's very strong momentum entering the midterm elections next year. And with slower inflation, consumers will really benefit a lot here in the Philippines. Now, we've been seeing a pretty significant deceleration in inflation, and really, it's the BSP has done a good job in making that possible. Hopefully, the national government will also follow through with reforms like agriculture supply and all of these supply side interventions to sustain this manageable inflation environment. If that can be kept in place for most of next year, I think our growth trajectory will not be disrupted all that much. No?
Over the more short term, how does
So that means for the
where do you
market,
think we'll
it's
finish the
essentially
year?
okay.
Yeah.
Yeah.
Where do you think we'll finish the year? Inflation, GDP, the peso, and the stock market.
Okay, so for inflation, we're looking at a full year average of around still 3.2, 3.3%, which is already within target. No? So the last 2 years, we failed to meet the 4% target. We were at 5.8 and 6, no? So for the first time in 3 years, we'll finally be on target. And next year, there is a very big chance we will be on target again. So that provides a lot of relief to consumers who, after COVID, had to experience back-to-back high inflation rate years. No? So finally, some relief. Now, Mr. Trump's coming in will probably make the peso a little weaker, some pressure on import costs, but probably not enough to bring us back above 4% for the whole of 2024. The whole of 2025. So with that kept manageable, BSP will probably be able to resume the rate cuts, although not as aggressively as before. So instead of looking at, say, 5% on the policy rate at the end of next year, we'll probably end up closer to 5.25, 5.5. Inflation, instead of our original forecast of around 2.9% next year, it will probably look more like 3.1, 3.2, still within target.
Slightly higher.
Yeah, but the exchange rate will probably remain under pressure. This year, probably closer to 57, as the remittances flows will probably help the November and December numbers improve a bit. But as we enter 2025, peso might start to come under pressure again. Mikey, as again, the policies of Mr. Trump will probably start to kick in maybe mid-year of next year, maybe late next year, to make the dollar even stronger. For GDP, this year probably slightly under 6%, not too far from 6%. Next year faster, at around 6.2, 6.3, again, because of the elections.
Okay, and the PSE index?
For this year, we're still hopeful for a Christmas rebound towards the 7,200 level. We were there already earlier this year, and it's just this correction that is probably making it a little bit more challenging, but it seems like 7.2 is still realistic at this point. Once people digest the real impact of the Trump win to the Philippines, I think at some point there will be some optimism. And then for next year, looks like there's a big chance we can get closer to the 8,000 plus level. Um, just because the fundamentals continue to remain strong and valuations in the Philippine market still remains fairly valued. In fact, a discount compared to historical and I guess a cross-country analysis. No?
Yeah. So the upside is there, especially given the declines as of late.
Yeah. So let's wait for the dust to settle first on the Trump win. Yeah.
You said it. Let's wait for the dust to settle on the Trump win. Okay, Jun Neri, thank you so much for your time.
Welcome, Mikey.